What is up, everybody? It's Stas here. Welcome back to another video. So AMC has been one of many companies out there that has been devastated in this past year, and I've been getting so many questions on it. Stas, should I buy AMC stock, sell AMC stock, stay away from it? Is it a good spec play? So I figured, let me make a video, go over all of these different questions, break down some technicals, go over some fundamentals, financials, how's the company been doing, risks around the company, and some forward outlook here. And I just want to break down my thoughts on AMC in general. So if you guys find value, you know what to do. Hit the like button, subscribe to the channel, make sure to get yourself into the Strive Smart Discord chat, the Facebook group, get 4 stocks from WeBull valued up to $1,600 and $30 from M1 Finance. All of those are absolutely free and linked right down below in the description box. So let's take a look very quickly at what the stock has done in this past year ever since the CV came onto the scene. And you guys can see it right here. And even if we zoom back before that, you can see the 3-year chart. It's not like the CV put the nail in, or it might have put the nail in the coffin. We don't know quite yet. But the point I'm trying to say here or make here is the movie theater business has been struggling, right? It's been struggling even before the CV, and the stock price here for AMC reflects that. I mean, before the CV, take a look. It went from, $12 to $20, which that was an increase. That was in, the end of 2018. But ever since the end of 2018, it's been a straight downtrend. AMC's gone from $21. It went all the way to about, $10, $9. It spiked to about $12, $13 heading into 2020. And 2020 came about around January 2020, a year ago. The stock was about $7, $8, and the CV happened, and you guys know what happened after that. The stock got destroyed. It went from $7 to about $2, so it dropped a ton, and we don't know quite yet. This could be the nail in the coffin CV for these movie theater companies. We don't know quite yet. But as of now, it's hanging on from a thread. And you guys obviously know what AMC is, or else you wouldn't have clicked this video. It's a big movie theater chain. And ever since CV came about, people have not been going to the movie theaters here in the U.S. especially, and internationally, since they do operate internationally as well, and we'll talk about that later on in this video. And one thing worth mentioning, and we'll talk about this first, is, again, like I said before, this company is kind of hanging from a thread right now, and they need capital. Companies that are not bringing in revenue, they for sure are not bringing in any profit. Companies like that, they can't just go on forever. I mean, they're going to go bankrupt at some point. And let me tell you, this company needed capital, and they still need capital. And the CEO has been saying that if they don't get capital, which they did, we'll talk about that in a second, and they don't get more capital in the future, the CEO said AMC, they're not going to have enough cash to be alive. Let's put it that way. And in other words, they're going to go bankrupt. So what just happened, which ended up pushing up the stock in the short term? You guys can see today it's up 8%. And in the past couple of days, it's gone bananas from $1.90 back in the beginning of January. Now it's trading close to $5. What the heck happened? Well, they got that capital. They got a good chunk of capital. AMC announced on 1/25 that since December 14th, about a month and a half ago prior to me filming this video, AMC has successfully raised or signed commitment letters to receive $917 million of new equity and debt capital. This increased liquidity should allow the company to make it through its dark CV impacted winter. And that's another thing worth noting. They're getting this capital, but we're not quite out of the woods yet. There could be some dark days ahead for AMC still, which is why they might need even more capital later on. And AMC CEO and president said, quote unquote, "This means that any talk of an imminent bankruptcy for AMC is completely off the table." That is, he said that right after they got this $917 million in financing. So this is great in the short term, and this boosted up the stock aggressively, the fact that they got this capital, and now investors and traders are a bit more at ease, although we're not quite out of the woods yet. But most people are a bit more at ease now, knowing that, okay, there's capital, the risk of bankruptcy is a bit lower. And even before this big, almost $1 billion they just got, and mind you guys, a lot of this debt is at pretty high interest rates, and we won't go into that in this video, but that's worth noting. This money's not cheap. It's not cheap at all, but they do have the money. And even before this big, almost $1 billion of capital they got, they were getting hundreds of millions of dollars throughout, the quarter two of 2020, quarter three, when things were really rough. That's where they were getting a lot of money to keep them afloat. And if they didn't get any money, there's no way AMC would be operating today. And as of October 2020, AMC was actually operating approximately 539 of its 600 domestic locations and approximately 260 of its 358 international locations. And again, that was back in October. And we've actually been doing pretty decent in terms of AMC reopening ever since August. And we'll talk about some of their quarters before August. Right now, financially, they were abysmal. But slowly but surely, ever since August, September, October, these stores went from mostly, or these movie theaters rather, they went from mostly being shut in the U.S. and internationally, and now they're slowly opening back up, which opens up kind of an interesting, maybe a spec play here for a movie theater play, right, with AMC. But we'll talk about that more later on in this video. And to touch on how bad it actually was back in March, those rough periods about 8-9 months ago, 630 locations were closed in mid-March, and revenue was $18.9 million during the 3 months that ended in June. That was down 99% from the same period a year ago. And that's just unbelievable. The revenue dropped 99%. And we're going to talk more about revenues now from quarter three and quarter two, so you guys can put a number on just how poorly AMC and many other movie chains out there and many restaurants and just, these businesses in general that are quote-unquote non-essential, you'll see how poorly they actually did. So you guys can see on the screenshot right here, revenue for the 3 months that ended September 30th, 2020, in other words, Q3 of 2020, those revenues were $119.5 million versus, get this guys, the $1.3 billion they did in 2019. So you're telling me they went from $1.3 billion in 2019 to $119 million in 2020? That's exactly what happened. And that was a decrease of 90.9% year over year. That's just unbelievable. This company literally got decimated. There's no way around it. There's no other way for it. They got decimated. And this is even worse. Take a look at this. Well, it might not be worse percentage-wise, but it's really bad. Let's put it that way. Revenue for 9 months ended September 30th, so pretty much the whole year of 2020 up to September 30th. Those revenues were $1.07 billion versus the $4 billion in 2019. That was down almost 75% year over year. Talk about terrible. Talk about a business hurting. That is a business hurting right there. And the AMC CEO said, quote unquote, AMC US operations were suspended for nearly 2/3 of Q3, and yet despite unrelenting obstacles, the AMC team continued to make significant progress in the pursuit of 3 key priorities: strengthening the liquidity position, which we talked about earlier. They need money right now, cash, to stay alive. And they're dramatically trying to reduce their operating and capital expenditures because they're not bringing in money, they're not making money, so they have to cut down on expenses, and they're looking to continuously and safely and successfully restore their operations. These 3 things, hopefully in the next year, 2 years, as things get back to normal, hopefully these help AMC survive through this mess. And on top of that massive revenue decline, they also lost $900 million in the 3 months ended 9/30/20. So in the Q3 of 2020, they lost 900 mil. Poof, gone, vanished, and they lost almost $4 billion, $3.6 billion to be exact, in the whole year of 2020 up until 9/30. So for the 3 first quarters of 2020, 9 months, they lost $3.6 billion. That is unbelievable. And if you guys thought that was bad, oh man, they did even worse in Q2. Revenue for 3 months ended 6/30/20 was $18.9 million. We talked about that earlier in this video. They did $19 million in Q2 versus the $1.5 billion in Q2 of 2019. So they literally did $19 million, guys. For a company like AMC, that's nothing. And that was down 99% year over year, which is insanity. And the revenue for the 6 months ended, so for the first 2 quarters of 2020, revenue was $960 million versus $2.7 billion in 2019. That's also a very big drop of about 64% year over year. So you guys get the point. Fundamentally speaking, looking at these revenue numbers, they're not doing so great. But like I said before, that was in Q2, Q3. Q4 is a bit different. We'll see how they did. Or actually, they didn't report Q4 because I was looking at their earnings reports, their quarterly updates before this video. So it's going to be interesting. Q4 numbers are going to be very important for this company to see how they turned around things from Q2 to Q3. Very bad quarters. I want to see how they turn things around heading into Q4, as many of their locations in the U.S. and internationally, they were opening up in Q4, and they'll continue to do so here for the next couple of quarters, hopefully, right? That's the plan. Okay, so we broke down some financials. We broke down, some notes here from the CEO, all the financing, all that good stuff. And there's no way I'm going to end off the video without breaking down some technicals. We'll talk about that in a second. But on top of that, I'm not ending the video without talking about the future. What's coming about in these next couple of months? What should we be looking out for? And one big challenge here, guys, is, of course, the CV. We obviously have to see more people vaccinated, consumer confidence come back, people actually wanting to go out to the mall, go to the movie theater, go to AMC, go to a movie theater. We need people to do that. And any rise and a rise in cases of what and more fear around it, that's not going to be good for AMC. So as long as we slowly get people vaccinated, people get more confident to go out, that's going to be great for AMC, and AMC 100% needs that. And one thing that is happening right now that is not so great for AMC, we'll see if this is a long-term threat. It's definitely a threat here in the short term. AMC, the CEO even said this, quote unquote, it's a big challenge seeing Warner Brothers, and by the way, Warner Brothers, they're releasing their movies direct to consumer, right? This is the problem. This is a big challenge, the CEO said, Warner Brothers releasing its entire studio film slate for 2021 direct to consumer, which may result in other studios adopting a similar strategy. So now that people have been pent up in their houses, they're so used to watching movies on TV at home, ordering movies, Netflix, Hulu, Disney Plus, whatever. They're so used to it. This is a big threat because if more big, studio companies come out, release their movies direct to consumer, consumers might be like, forget the movie theaters, forget driving there, buying overpriced popcorn, all that crap. I don't have to go to the movie theater. I could just pay the $20 here at home, watch the movie, make my own popcorn, save some money, save some time, and stay home. That's a very big risk for AMC, and you guys must understand that if you're looking to invest. And like I said, just because quarter 2 and quarter 3 is behind us, the movie theater business is still not out of the woods. It is still struggling right now. And in fact, we're seeing major cities like New York and Los Angeles, they still have their movie theaters closed. AMC said attendance dropped 92% in October and November compared to the same period last year. As of November 30th, 404 of AMC's 594 U.S. theaters are open, and we're seeing capped seating capacity and limited hours of operation. Internationally, 108 of its 359 locations have resumed business, although with controlled attendance levels and reduced show times. Overseas venues have seen a similar decline in foot traffic, and AMC estimates that if attendance doesn't significantly improve in 2021, the company would require more than $750 million in additional financing to keep its theaters open. So just because they got $900 million in this past month, it doesn't mean that 2021 is free and clear. It's off to the races. No, they still need capital. They are still a struggling company. So we went over so much, guys, financials, fundamentals, and for me, my opinion and some technicals here, we broke out, first and foremost, we broke out after we got that financing news. We broke out of this descending triangle that is good in the short term. We're trading at about $4.75, $5 now. This could end up leading to more momentum, maybe up to about $6.50, $7. And I think it's heavily depending on this next earnings report. If we get good guidance, good numbers, we get some positive outlook, let's put it that way, I think the stock could see a nice pump. But for it to get back to those pre-crisis levels, I really think I don't think it's going to happen. I'll be honest. If you were to tell me AMC is going back to $20, I just don't see it happening. Honestly, I don't want to be extremely bearish on this company, but it's just not out of the woods and it's very risky. I mean, could I see it getting to $10? Yes, $10 I could see it getting to. That probably could be the level we do see if we open up in the next year, things get back to normal, but I don't really see these movie theaters making the same amount of money as they did back a couple years ago. I just don't see it happening, and for that reason, I don't see the stock going up to these ridiculous price targets like I've seen other people have, like $30, $25. I mean, again, I could see it get maybe $10 here on this, 180 SMA on this 3-year chart. That could be a spot it gets to. And another thing worth noting is we've seen a lot of stocks short squeezing out there these days. AMC is pretty heavily shorted, not as much as some other stocks. I believe their short float right now is about 35%, so we could see a short squeeze that could get us up to maybe $7, $8, $9, $10, especially with good earnings, and that's where I see it going, to be honest, in the short term. But on top of that, there's a lot of risk. Like I said, this company could still go bankrupt, and you guys must understand stand that. So that's pretty much it, guys. This is simply a speculative stock at this point. I would not be messing with any amount of money that I could lose, that there's no way. I'd only put a very small amount of money in this if I were willing to take that risk and I was willing to lose the money completely. And those are my thoughts. So let me know what you guys think. Drop a comment down below in the comment section. I would love to know. And if you guys enjoyed the video, hit the like button, subscribe to the channel. Make sure to get yourself into that Strive Smart Discord chat, the Facebook group. Get 4 stocks from WeBull. Those are valued up to $1,600. All you have to do is deposit $100 into that account and you get your 4 stocks. And don't forget to also get $30 from M1 Finance. Simply use my link down below, open up an account, deposit any amount of money, and that is how you get your 30 free bucks. And again, all of those are free and linked right down below in the description box. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.